It's time now for some more business news here on France 24 with Stephen Carroll, who's with me here in the studio. And Stephen, you're starting in the US, where the FBI has recovered most of the ransom money that was paid to those hackers who shut down the Colonial oil pipeline last month.
Last month's ransomware attack forced the pipeline to halt operations. It sparked a run on fuel in certain parts of the United States. Now, eventually, the pipeline was brought back up and running after the operators paid more than $4 million in a ransom. The FBI has been able to track the payments using the blockchain public ledger that logs all Bitcoin transactions. They then managed to seize around 85% of it.
We identified a virtual currency wallet that the dark side actors used to collect a payment from a victim. Using law enforcement authorities, victim funds were seized from that wallet, preventing dark side actors from using them.
Now, the bad news for the company in all of this is that the value of Bitcoin has slumped since it paid the ransom. On the 8th of May, when the ransom was paid, Bitcoin was trading just under $60,000 each. It's tumbled in value since, mainly over fears of increased regulation in China, according to the website CoinDesk. Today, Bitcoin is worth just over $32,000 a piece, the price taking another slump since news of this ransom being seized.
Next to the latest on proposed changes to international tax on companies and some potentially bad news for Amazon, Stephen.
When the G7 finance ministers announced they had an agreement to overhaul how big multinational companies are taxed, they said it would apply to companies with a profit margin of over 10%. But that doesn't include Amazon, despite it being one of the world's biggest companies. According to reports today, though, negotiators are working on a way to ensure the e-commerce giant does come within the net of any tax deal. The Financial Times says it could include considering Amazon's web services division, which is highly profitable, separately from its online shopping arm. The company says that it fully expects to be covered by any deal agreed at the OECD.
Meanwhile, Stephen, Apple is making a big push for privacy with its latest software upgrades.
The tech giant unveiled a host of new features at its development conference on Monday. They include making FaceTime more like its rival Zoom. But Apple is also building on recent privacy changes, which gave users the chance to stop apps tracking their activity for advertising purposes. Catherine Viette has the story.
In a nod to the success of Zoom and Microsoft Teams, Apple is upgrading its video calling software. FaceTime is getting enhanced audio and video features, but the biggest change, allowing access to Android and Windows users through their web browsers. Apple, too, is doubling down on strengthening privacy protections.
We believe in protecting your privacy and giving you transparency and control over your information.
As part of the changes, users will be able to see what data an app is collecting and sharing. Apple is also making it harder for marketers to see if and when an email is opened in the Mail app, as well as preventing third parties from accessing a user's IP address in Safari. A move analysts say could have dire effects on the digital ad industry.
Any company that relies on tracking individuals or being able to figure out who you are and what you do to serve you advertisements will be very challenged due to these new privacy restrictions that Apple has set up.
The annual developers conference comes on the heels of Apple's courtroom battle with Epic Games, the maker of popular video game Fortnite. Epic has sued Apple over the 30% commission it takes in the App Store, alleging abuse of its monopoly power. A ruling is expected in the coming months.
Let's take a look at what's happening on the markets for you next. Pretty calm start to European trading today. We've got some small gains in London and in Paris. Frankfurt slightly into the red at the start of trading. Asian shares earlier trading generally lower. New figures on the Japanese economy showing a smaller than expected contraction of just 1% in the first 3 months of this year. The Nikkei in Tokyo finishing the day down 0.2%.
And finally from you, Stephen, the French luxury giant LVMH is making a big investment in its workers.
The company, which owns brands including Louis Vuitton and Moet Champagne, is creating a €30 million solidarity fund for workers. It's to help staff deal with difficult personal situations, many of which the company says have been exacerbated during the coronavirus pandemic. It includes a special psychological support service for its 150,000 employees. This announcement coming as the company has seen a strong recovery in sales after the pandemic, briefly making its boss, Bernard Arnault, the richest man in the world. Thomas.
Stephen Carroll with the Business News. Thank you very much.